Hey Jeff, thanks for joining me.
Hey, Steve, thanks for having me again.
Hey, talking about a not so fun topic here, but one we're really seeing in the real estate industry, uh, residential and commercial, and that's rising insurance costs really having an impact. We've talked about Florida looking at like a 400% increase over I think the past 5 years, but this is a national phenomenon also, where we're seeing home insurance really go higher. In 2 years, the average annual premium has risen nearly 20%, from just under 2,000 to almost 2,400 a year. That's according to Cambridge, Massachusetts startup Insurify. Premiums alone are making up 1/10 of monthly housing costs, according to data from Intercontinental Exchange Inc. And that figure is as high as 25% in certain high risk markets. And we're seeing some people just not get insurance or not being able to afford insurance at all. 12% of homeowners surveyed third quarter of 2023 said they had not purchased homeowners insurance. Some of your thoughts in terms of escalating insurance costs and the impact it's having, not just on residential, but maybe also the commercial market a little bit here.
Well, I think, look, there's two sides to this equation. And there's kind of liability on both sides, kind of where I'm sitting. The first one is probably the easiest one and probably the one that most people want to crucify is the insurance companies themselves. They're making hundreds and hundreds of millions of dollars a year, and then they've got investors behind them that they're paying these distributions out to, and they're not retaining any of these the revenues to cover the cost of storms. Now, there's you can vilify that, but the reality is it's still a business. But the truth of the other side, I guess, the equation of that is that when an insurance company does that and then claims bankruptcy, that's kind of a problem. And then another insurance company, which is called reinsurance, has to come in and fund those losses and take over for those insurance companies, and that's where your costs go up. The other side is the actual insurance. The people are being insured, the homes that are being insured. During at least in Florida, I'm not saying everywhere, but in reality, there's been a lot of roofing companies that have gone through, you know, where it's maybe 12 months more after a storm, and saying that there was a storm that came through, and that storm and the roofs have problems as a result of the storm, then insurance is covering it, and people are just paying their deductible to get a new roof, and then their insurance costs go up and they claim foul. Well, I mean, there's responsibility there for the homeowners. Everybody has to take on some responsibility, but the truth is, it's just everything's gotten expensive, and it's definitely hard. But I think there's a lot that people are really gonna have to learn from this.
Yeah, I mean it's a reflection of inflation in a way that labor costs are higher, materials costs are higher. We've also seen changes in living patterns where people are increasingly moving to a lot of times nicer climates, and nicer climates that sometimes have higher risk of fire or flood or storms. I mean, certainly like in California, there's some really nice rural areas that are at risk of fire,
Of
right?
course.
And with Florida is a really nice climate that tends to have a lot of storms. So some of this is relocations. I think as investors, the theme that's interesting to us is housing unaffordability. And this is one factor that's continuing to drive it. It's not going to go away. And it is going to force people to rent instead of buy. And that creates some opportunities in the multifamily space as long as you're smart enough to model in these higher costs, which we do. So, I think on one side, we're not happy to see it as citizens and neighbors of people. As investors, we have to figure out how to make money off of it, and multi-family in some of these markets makes a lot of sense.
Yeah, I mean, look from the investment side. It always makes a lot of sense for us because that's what we're doing. We're trying to provide housing and affordable housing that we can provide to these markets where that don't have them. I think eventually there'll be some, let's just call it, something that the government will do, and it'll probably be extended instead of 30 years, something like a 35 or 40-year or even longer mortgage that people will be able to get to try to reduce the house. I'm not saying that's a positive, but it's something that, if I'm just kind of shooting from the hip, what I could see the government doing just to reduce those costs, because I don't see them doing a whole lot to insurance, helping insurance costs go down.
No, I agree. So I think, we'll be continuing to look for good multifamily properties that people can afford to rent and live in, especially in markets impacted by escalating home costs, including escalating insurance costs. I'm sure people would love to hear us say that, that this is going to not be so bad in the future, but I think every sign is that high home insurance costs are here to stay. But appreciate your insights, Jeff. Wish we had better news for folks. But hey, if in the comments section you think we're off or wrong or missing something, let us know. Give us a thumbs up on the video. Subscribe if you haven't, and visit our website, selectfincap.com. Register for our weekly newsletter. Get news and information like this and opportunities at commercial real estate investment opportunities we're doing, including the multifamily space. Thanks a lot, Jeff.
Thanks, Steve.